The US is in a new race for resource independence. Under the Trump administration's energy dominance plan, Washington is moving fast to boost domestic mining and refining, cutting red tape, funding key projects, and using tariffs and trade deals to secure supply chains away from China. For investors, it could mean a fresh wave of opportunity across copper, rare earths, and uranium, but also new political and environmental risks. Well, joining us to unpack the legal and market implications is Jamie Franklin, partner at White & Case, a global law firm advising companies across the mining and energy sector. Jamie, thanks very much indeed for talking to us.
Hi, Devan. Great to be here.
Well, look, let's start here. From an investor's perspective, how transformative is this new US policy push? I mean, are we looking at a real mining supercycle or just a short-term political window?
I think it's hugely transformative. Our view is that the long-term US policy outlook is one of continuity. However, the approach that the current administration is taking to supporting particularly US domestic development of mining and metals projects is vastly different to what it has been previously.
Now, when you look down at what's happening on the ground, right? Fast tracking mine approvals. I mean, these sound bullish for developers, but what are the hidden risks investors should be aware of?
I think one key thing is needing to make sure that you're shovel ready within the next 12 to 24 months. You know, the concern is going to be that if you aren't good to go now and you start deploying capital on the basis of the current administration's approach, if there's a administration change, then you might be in a very different environment. And so you know, the key message is get going.
It's difficult, though, under a climate of uncertainty. And I mean, that's where you come in and sort of give that policy advice. How are miners coping with that fabric at the moment? Because there's just so much uncertainty on the policy front.
I think that people are looking at all of their options and are basically sort of multi-tracking to make sure that they can pivot from one option to another if they need to. That seems to be, you know, a trend that we're seeing across transactions.
Now, with the US taking equity stakes and backing projects overseas, and we've seen this happening of late in places like the Ukraine and Africa, how does that change the global investment map?
I think a key, you know, the focus of the current administration is shoring up security of supply and trying to develop an ex-China value chain that people can rely on to develop these projects without needing to rely on China price benchmarking and resourcing. And this is really sort of the main thrust of what's going on at the moment.
Let's talk about price benchmarking. You know, where does one start, especially in an environment like this? Is it a difficult task to get through?
It's difficult. There are survey referencing that people can sort of use. I think we're seeing all sorts of creative and innovative solutions being sort of developed at the moment to give off-takers the sort of comfort that they need on long-term supply arrangements and at the same time preserving the position of suppliers.
You know, when we're speaking about jurisdictions, that's another sort of aspect that comes to fore. I mean, if you look at what's happening in Africa at the moment now, with many mining companies having to reassess how they relate to not only the government's policies there, but socially on the ground. Have you been seeing, you know, a lot of questions around that from clients or from sort of surveys on the difficulty having to sort of deal with those type of jurisdictions?
This is a perennial challenge of developing mining projects. So I think these things are nothing new. You know, again, no matter what the current situation is, people need to be taking long-term views on these types of issues and making sure that they're future-proofing their developments to, you know, survive and withstand policy environments, not just for the next sort of few years, but for the life of their mine.
You know, it's interesting. Environmental rollbacks can speed up projects, but also invite lawsuits and backlash. How much legal uncertainty does this add for investors?
You know, to refer back to my previous answer, I think, you know, it needs to continue to be at the forefront of everyone's minds. People need to be doing their due diligence. They need to be coming up with operational management policies that are going to be robust and are going to minimize risk in these areas.
And finally, Jamie, I mean, where do you see the best opportunities? I mean, which minerals or which stages of the value chain are most likely to benefit from Washington's new approach?
I think that there's a lot of focus on mining and production, but you know, a key part of the value chain that also requires development is processing and refining, and this is where there's going to be a lot of opportunity, I think.
Well, we're going to have to leave it there. Well, Jamie Franklin, partner at White & Case, thanks very much indeed for talking to us.
Thank you, Devan. It was a pleasure.